Hello, everyone. Thanks for joining us on this Wednesday afternoon, and welcome to this educational presentation. Now, today I want to tell you about 4 simple steps you can take to generate a more consistent trade. These are really simple steps that you can start applying as early as today if you'd like. And let me share with you how simple this process is. As we look at this chart here in W-Day or Workday Inc., as you can see, looking at it, doesn't look like much is happening, right? This was coming into February, kind of a sideways market or what we call a range market. Well, the first step would be to pick any market you want, regardless if it looks like a range, regardless if it looks like it's going straight down, straight up, regardless if it's a future, stock, currency pair, or even Bitcoin. It makes no difference because the process I'm going to share with you can be applied to all markets and all time frames. So we just picked Workday here, and even though it looks like we're in a range market, step number 2 is telling us whether we should be buying this or selling this. And step number 2 would have confirmed that we were in a buy zone, so it's okay to buy this. We shouldn't be looking at this from a seller's point of view, but from a buyer's point of view. Okay, so now that we've decided to buy it, we have to apply some structure in the form of a method. So this method actually generated 2 signals. Now remember, we said that we only wanted to be a buyer, so step 3 would have filtered out this sell signal and given us a really nice potential gain of 52 points in 2 weeks. This is a very simple 4-step process that you can start applying as early as today. In fact, we've made it even simpler for you by having this process readily available on the PTS Primo charting platform. This is the educational trading platform that really makes trading simple. So welcome once again. My name is Steven Primo. I am the president and founder of Specialist Trading. If you're new to my webinars, let me just state right off the bat that we are first and foremost an educational company. In fact, that's all we do. That's our number one job, is just simply to provide traders around the world in over 115 countries and in every state in the United States education that I've accumulated in my 44 years of trading. I started out trading on the floor of the Pacific Stock Exchange some 44 years ago. I was on the floor for 16 years, and 9 of those years I was a specialist. That's where we get the name specialist trading. A specialist is just someone who specialized in making a market. So in those days, if you wanted to buy or sell a stock, you would call your stockbroker. Your stockbroker in turn would contact the floor broker on the trading floor. He would in turn take the order and walk up to the trader who specialized in making a market. That's what I did. So I specialized in making markets in stocks like IBM, Beverly Enterprises, US Air, Reynolds Metals, and stocks like that. A lot of top stocks that were, really prevalent in those days, and you really had to be able to trade them. Now, here's the deal. Most of the things that traders use today, I used then as well. For example, I was really heavily involved in overbought, oversold indicators. I was heavily involved in looking at the earnings and looking at all of the trading gurus of what they thought the stock was going to do. Okay, and guess what? My first year or two as a trader, I didn't make a dime. The fact is that the things that most traders rely on really don't work in terms of consistency. So after that point, once I was lucky enough to have some mentors turn my trading around, those are all the things I've accumulated, what they taught me and other traders have taught me in my 4 decades of trading. And this is what we do at Specialist Trading. Try to teach you so that ultimately you can turn your trading around and not just have a good year, maybe a good couple of years, but maybe a good couple of decades to trading so that you can really sustain your growth. So that's what we do at Specialist Trading. We are first and foremost an educational company. Now, first of all, we are required by law to share this with you. So please take a moment to view our disclaimer. I'm going to share with you a lot of performance results today using these 4 separate steps, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, we've gotten a lot of rave reviews about our Twitter page, so if you'd like to get more information on a daily basis, please feel free to follow us on Twitter. There's our handle right there. I would suggest copying that down because every day I post different information, a lot of signals our strategies have generated, and I share what the motivation is for generating the signal that you'll see on the Twitter page. Also, little bits of financial wisdom I've accumulated along the way. So lots of great free educational information on a daily basis. So please feel free to follow us on Twitter. Now remember, if you've come here today thinking I'm going to tell you what to buy or what to sell, or if you come here today thinking I'm going to tell you what the perfect stock is to buy or sell, or what the perfect time frame is to trade, or what's going to happen with earnings of some particular issue, you've come to the wrong place, because that's not educating you. What that basically is doing the same thing all the other websites do, is that they're telling you what to buy or sell, telling you to do what they do. And that really is why most traders fail, because we're blindly following what we believe someone who has the experience and the knowledge and the wherewithal to make money, so he must know what he's doing, so I guess I'll just follow whatever they do, right? That's why most traders fail. That's why I did 44 years ago, because I did those same exact things. So what we try to teach you is all the information that shows high levels of consistency, and then let you make your own trading decisions. You see, my goal is not to force feed you signals, not to trade for you, not to tell you what to buy or sell, or not to tell you what the market's going to do. My goal is simply to teach you how to trade with a specialist edge. The same edge that was taught to me some 44 years ago, some 4 decades ago, and hopefully I'll be able to sustain your trading for that same amount of time, okay? Now, this is going to be a classroom today. Once again, this is an educational class, so I want you to ask as many questions as possible just to fully understand the process, but please wait till the end of class to ask any questions. I promise I'll get to each and every one of them. Now, if you're having technical difficulties, if you can't hear my voice, or if the screen is fluttering in and out, don't worry, we will send each and every one of you a link to this recording, because we're recording this. So if you can't see or hear clearly, or if you have to leave early, each and every one of you will receive a link to today's presentation. All right, so if we have that all out of the way, let's begin today's educational class, and let's get right down to it. What we're going to be talking about today is strategy number 4. This process, this 4-step process, is built around a strategy that I was also taught some 4 decades ago, and that I continue to use in some capacity to this day in my own personal trading. So let me give you a few of the highlights of this particular method. It's for all traders, from beginners to advanced. So I don't want you to think that if you've only been trading for a couple of weeks, you'll say to yourself, well, I can't trade this stuff. This guy says he's been trading for 4 decades. That's too advanced for me. I don't really follow along a lot of that stuff. Everyone gets the same basic format. So it doesn't matter if you're a hedge fund trader, which we have some of our students are hedge fund traders, or it doesn't matter if you've been trading for 30 minutes. Everyone gets the same basic rules in the beginning. And then once you understand the process, then we work out from there according to your own level, okay? So if you're a more advanced trader, then we'll share with you how to trade it in a more advanced level. If you're more of a beginner, we share with you how to trade it in its beginning stages, okay? Now, it's basically for traders looking to catch momentum moves. And the beauty of this is that oftentimes it signals buy and sell setups before it even appears as if momentum is there. So that's really what's nice about it. Now, its intensity level is right in the middle. It's a moderate number 2. So it's not too intense. It's not too easy or lackadaisical. It's just very moderate type of strategy. It only uses one indicator, okay? And I'm going to share with you in a few moments what that is. So it's a pattern recognition based strategy. We're looking for a specific pattern. The beauty of strategy 4 is you can apply it to any time frame, any direction, and any market. Now, even though the majority of snapshots I'll share with you today are stocks, trust me, you can apply it to anything. Doesn't matter if you trade futures, currency pairs, if you trade intraday, doesn't matter if you trade Bitcoin. We have students trading strategy 4 on all those different types of markets, okay? Now, if you're a member of this course, you receive automatic buy and sell indications, up and down arrows, which you'll see in just a few seconds. But remember, this isn't a black box. We want you to understand the rules. We only provide those arrows for educational purposes so that you can check your work. Ultimately, we want to get you to the point where all you have to do is look at the chart and you know right off the bat that that's a buy or a sell setup right there. That's how simple it is. I've already gotten to that point. I don't need these arrows to tell me if there's a strategy number 4, buy or sell signal. But in the beginning, while you're learning, we provide them for you so you can check your work. Now, our edge at Specialist Trading is consistency, meaning that it's an awareness of losses. From time to time, you will have some losses. That's okay. What you want overall is a consistent method that's able to recoup those losses. See, that's what will really sustain you. That's what will give you the longevity. Most traders are looking for the opposite. They're looking for some big home run. I talked to a student the other day. He said, Steve, I just want to catch that big home run where, it gaps up 50 or 60 points and I can, really take it easy and retire after that. I said, listen, that can happen, but you're searching for the wrong thing. What you should be searching for is consistency, because that's what will sustain you. I know tons of traders who made home runs when I was trading on the floor, and they gave it all back. They made literally millions of dollars in a matter of days or weeks, and then they eventually gave it all back, trading the same method. So it's not about hitting a home run, because if it's easy to make it, it's just as easily to give it back. What you want to do is have a method that has a 2-step forward, 1-step back approach, and that's what strategy number 4 has. Okay, so let's begin this 4-step process, okay? I'm going to share with you step by step how simple it is to apply. Okay, so let's start off with step number 1. Obviously, choose the market you're interested in buying, because we're looking at buy setups right now. Now, I know it sounds silly, but remember, you can apply it to any market. So if you're a currency pair trader, choose the currency pair. The British pound, choose the euro dollar, whatever you want. If you're a Bitcoin trader, choose Bitcoin or Dogecoin. If you're a stock trader, choose whatever you want. IBM, choose Apple, whatever you're interested in. All right, now, as we look here at this older chart of EL, just for educational purposes, in hindsight, obviously, we would have wanted to buy this, right? But how could we have taken advantage of this? All right, we go to step 2. Click on our platform, the PTS Primo charting platform, the buy sell line in the upper green strategy tab. All right, so why do we do this? Here we have the buy sell line. Click this on, and in the drop down menu, we see here we have 4 different functions, 4 different ways and features to view the buy sell line. Let's click on fluid. So what is this telling us now? We see part of the screen is blue, the other part is red. Well, the buy sell line's function is simply to tell us whether we should be a buyer or a seller. It doesn't tell you where to buy, what time frame. It just tells you whatever you're looking at. If price is in the blue zone, well, that's the buy zone, and that means you should be a buyer. Now, if price were below that and in the red zone, well, that's called the sell zone, and you should be a seller. So obviously, looking at this chart here in EL, we've been in the blue buy zone the entire time. So we knew well in advance, way back here, that we should have only been considering this from a buyer's perspective. You see, what most traders do is they'll see it have a big run and they say, wow, this is too overbought. That chat room I went to says it's gone up way too high. I've got to sell it, right? But you should never sell in the blue buy zone. And conversely, you should never be buying in the red sell zone. This will increase your odds for consistency tremendously. All right, let's go to the next step now. Now that we know that we should have been a buyer this whole time because the price was in the blue buy zone, we go to step 3. We're only going to trade buy signals that have a steep upward sloping buy sell line. Okay, so obviously this has a rather steep upward sloping buy sell line. The reason why we do this is because this is telling us where there's strong momentum. You see, if you kind of have a flat line, it's basically just telling you that, well, it doesn't mean that it's bad. It just means that it's kind of like if you wanted to go swimming in a river and you wanted to really go down the river or raft down the river, which river would you rather take? The one with a strong current or the one that has no current at all? It looks like a slow-moving pond. Well, obviously you want the one with some nice current behind it. That's what it means when you see a nice upward sloping buy sell line. Okay, so once we find that strong upward sloping buy sell line, then we simply click on strategy number 4 in the green upper strategy tab. So all you have to do is come in our green upper strategy tab, click on strategy number 4, and click on signal arrows. And as you can see, look at all the buy signals that were generated. Okay, you think you could have taken advantage using this simple 4-step process? Now, we have a way to even better this because we've gotten feedback from a number of our students who trade this in multiple markets and time frames. They've reported that some of their most consistent setups are the signals generated closest to or touching the buy sell line. Okay, so now we can rev up our consistency even more by kind of filtering out these ones that are generated away from the buy sell line and only taking the ones that are touching it or really close to. You see how you filtered out a lot of that? And now you can take those high probability setups. So you don't have to be buying after these nice big runs here and then have to go through this sell-off or pullback. You can buy towards the bottom here, right when it's closest to or touching. And we just filtered out a good majority of the signals, okay? You see how simple this was? There's no reason to look at earnings. There's absolutely no reason to go to some chat room and find out what they're buying or selling. There's absolutely no reason to see what the guys on TV say after the market is closed. For the first time, you're taking charge of your own trading destiny. Why? Because you have a method that's very consistent, it's very sound, and it's based on one thing, listening to what the market wants to do, not somewhat outside source like the institutions or volume is telling you. It's the market telling you which direction it wants to go and where these high probability buy points are. Now, what if the market turns around? Because obviously we've been going up for the last year or so. What if we start to come down? Will strategy number 4 accommodate us? Well, let's look at some sell setups, step by step. Step 1, once again, choose the market you're interested in. Could be Bitcoin, currency pairs, could be a 5-minute or 10-minute chart of the E-mini futures, or it could be a stock. Makes no difference. In this case, we have a chart here of OC, all right? And this is looking in hindsight. Obviously, you didn't really want to buy this, but let's see how this 4-step process could have helped us. We go to step 2, and we click on the buy-sell line. This is in the upper green strategy tab because, sure, in hindsight, we know that we wanted to be a seller, but what about up here where we didn't have a lot of information? If we clicked on the buy-sell line, clicked on the fluid feature, we want to see which zone we're in. And guess what? Well in advance, we had consecutive closes in the red sell zone. So this was telling us, even though you have these bounces along the way, see these bounces? These were selling opportunities, and you should not be buying into it, but actually look forward to selling those little bounces, those little rallies in price. And until we had consecutive closes in the blue buy zone, this should be only looked upon from a seller's perspective. All right, see how simple this is? And once again, all of this is one click away on the PTS Primo charting platform. All right, so now we know whether we should have a buyer's or seller's perspective, and in this case, a seller's perspective. We go to step 3. We're only going to trade signals, sell signals, that have a steep downward sloping buy-sell line. Because remember, just like that metaphor with the river, we want some current behind us. We don't just want a flat line in the buy-sell line. So in the beginning, the buy-sell line was kind of just going sideways to lower, but at this point, it starts to really kick in. This is telling us that there's strong momentum to the downside. That's the river with a lot of current. Those are the signals you want to take, which takes us to step number 4. We simply click on strategy number 4 in the green upper strategy tab. Right here, we click on the tab in the drop-down menu, click on signal arrows, and look at all the sell signals it generated, okay? Now, some of these were really good. But remember, we want to take the high probability ones, all right? So we only want to take the ones that are in the strong downward slope. Now, if we want to kick it up a notch even more, we only take the signals that are closest to or touching this strong downward sloping buy-sell line. And that's these right here. See what a nice little trade you had? Now, you could have just avoided all of this, even though there was some profitable stuff, but it started to get a little choppy here, and just taking these two, either one, and look at the downfall right there. Why? Because you're touching the buy-sell line, and you have a real strong downward slope. You didn't care. Maybe there was some news that caused this to fall out of bed. We don't care. Maybe there was some earnings announcement that caused this to fall out of bed. We don't care. Who cares? It doesn't matter what the reason is. The point is, the market told us in advance before that announcement probably came out. So that's all we should listen to, all right? The thing we're actually trading and not some outside source. We're not trading earnings. We're not trading what some guy says in a chat room. We're not trading what institutions are doing. We're trading the chart in front of us. So that should be the only thing we apply our focus to. All right, so let's look at some more current examples now that you understand the process. Let's see what you could have done with this simple process in the last month or so. All right, here's an example in HSIC. All right, we have a nice upward sloping buy-sell line and 2 buy signals generated coming into January and a quick 8 points to the upside if you decided to take that. All right, each of these were close to or touching the buy-sell line. Here's another example, WBA, Walgreens, okay? Now look at this. We have a nice upward sloping buy-sell line, not a lot, but then it starts to really kick in. and we have some buy signals generated along the way. Which ones do we want to take? Well, if we're taking the high probability ones, we're not going to take the ones that are away. We're only going to take either one of these two, which could have generated a nice 15 points, okay? You see how that filters out? Now, obviously, if you waited long enough, these would have turned around and turned into a winning trade. But why do you want to wait around? We want to be in the trades that the minute we buy, they go up. The minute we sell, they go down, right? Here's an example in BMRN. Same thing. We have a nice kind of upward sloping. It's not really strong, but it's still upward sloping. We have a couple of signals away and one that is intersecting. So we're going to bypass the first two, take the last one, and look what happens after that. Straight up, 15 points in just about a week. Here's another one in Lulu. Okay, actually two more in Lulu. Here we have a really nice upward sloping buy-sell line. Price is in the buy zone. Even though we opened lower, we're in the sell zone, we closed above. So that's okay. It's still a valid signal. But look at the first one. We're pretty far away from the buy-sell line, so we want to bypass that one. We take this one, and in 3 days, 30 points, okay, in Lulu. That's not a bad little trade. Now remember, you don't have to buy the stock. You could have bought options if you like, all right? It's up to you. We're not going to tell you how to initiate the trade. Remember, that's your decision. We're here as educators to educate you what to look for. Once you know how to properly identify a high probability strategy 4 setup, then you decide how you want to trade. Somebody may say, well, you know what, I'm an option trader. Great. You can either buy some type of spread with a bias to the upside or maybe just buy the calls. Someone would say, oh, no, Steve, I like to buy in my IRA account. I like to buy, shares there. Great, then buy the stock. But you're in charge. You see, the entire industry is based on you not being in charge. It's based on you blindly just following what some so-called guru is telling you what to do. I had a student that I emailed recently that said some guru had told them what to buy or sell, and that they were just taking the signals, and how could I apply my stuff to theirs? And I said, well, you really can't. It's like mixing apples and oranges, because our philosophy is you should never blindly take a signal from what someone is telling you. You should make your own setup. You should rely on what you want. And that's what we teach you in our courses, what to look for, and then how you can decide if you want to take the trade or not. Now, this was a nice quick 30 points in about 3 days. Here's another example of ULTA, Alta Beauty. Once again, we have a really nice, strong, upward sloping buy-sell line. So you want to take these signals here. Our first signal is pretty far distance away, so we don't want to take that one. If we had taken this one that intersected, it's okay because we still closed above. That's a nice 40 points in a little over a week. Now we look at the original chart I shared with you in the opening of the presentation, workday. All right, remember we had two signals? Well, we kind of have a nice upward sloping buy-sell line. It's not straight up, but it's still upward sloping. So that automatically disables this one. We're not going to take that. We automatically say, well, if we want to go long, or I should say, if we want to go short, this slope should be going down. And as you can see, it's going sideways to up. So we don't want to take that. But this is the one we want to take, even though it's the majority of these bars are below. Look where we closed. We closed just above. So that's all that matters, where the close is. And in the next 2 or 3 weeks, that's 52 points to the upside. Moving on to LRCX. This was in January, coming into this month in February. We had a really strong upward slope right here. The first two signals were buy signals, and they were valid, but look how far they are. So we chose not to take them. And eventually, if you had held on, they would have worked out very nicely. But remember, we want to be in trades that take off the minute we get in. Even though it's not guaranteed, we want to try our best to find those setups. And the way you can do that is with a strong upward slope, a strategy number 4 buy signal, either close to or touching the upward sloping buy-sell line. And we have it right here. So there was a nice 80 points in a couple of weeks. Lastly, let's look at BIDU. Same process, a nice upward sloping buy-sell line. This is a little bit too far away for our purposes, so we're not going to take that. But we take these ones very close, either one, 125 points coming into the end of January. Okay? Now, here's how this can also help you not to take a trade, a losing trade. For example, this was a valid strategy number 4 buy signal. It met all the requirements. It closed above the buy-sell line. Even though it's not a a ideal setup, it's still a valid trade. Now, how would we know to take this? Well, remember, the first thing we want to do is, with this simple four-step process, is to be in line with either strong up or strong down sloping buy-sell line. And as you can see here, we have a nice strong downward sloping fluid buy-sell line. So that goes against our principles to buy. So that automatically tells us not to take this trade. And guess what? We didn't lose any money. So this is also a filtering tool to filter out which trades to take and which ones not to take. So even if you didn't take them, some of the best trades are the ones you don't take because you wouldn't have lost any money. Now, remember we said, what if the market turns around? Well, this process can be applied to downward markets. Here we have in WEC, WEC Energy, a really nice, strong, downward sloping fluid buy-sell line. So we want to take sell signals. Here's one, but look how far away it is. So we're not going to take that. We'll take this one. Had we taken that, well, in a week or so, a nice quick 7 points, okay? Here's another one in PG, Procter & Gamble. Downward sloping, and we only have 2 sell signals, and they're touching. So we could take either one for a nice 10 points coming into mid-February. As we look at OSTK, this was earlier in December coming into January. We have a nice downward sloping fluid buy-sell line, and 2 signals were generated. Both were touching, all right? Had we taken the first one or the second one, each could have potentially captured 15 points. Now, in our course, I don't want you to think, it's up to you where to get out. We teach you upwards of 6 or 7 different exit points, 6 or 7 different stop placements, and even 6 or 7 different ways to enter. So all of this is provided within the course. I'm just sharing with you these highlighted areas of entry. As we look at NOC, look at all the sell signals generated touching or intersecting the fluid buy-sell line. Had you taken the very first one, which is valid and meets all our requirements, that's 27 points coming into February here. And then LMT, Lockheed Martin, the same thing. We have a nice, very steep downward slope. The majority of these are all touching and intersecting, but these 2 aren't. So we're going to discard these. Only take any one of these you would have taken. That's a nice 50 points potentially you could have captured to the downside. Now let's look at some different markets and some different time frames, just to share with you that this can be applied to multiple different markets, okay? Here's a weekly chart of AMED. Same process applies. We have a really nice upward slope. This is starting in 2019, coming into 2021. And we could do the same process of filtering out the signals that are not touching or close to, and these ones right here. So had you taken this one right here, or any of these, that's 150 to 200 points potentially you could have captured. Here's a weekly chart to the downside in FedEx. The same principles apply. We look for a steep downward slope, which we have. If we want to take the high probability setups in strategy 4, we only take the ones closest to or touching the buy-sell line. And so we would have not taken any of these except these 2 right here. And that's a nice 60 points we could have taken advantage of to the downside really quickly. Now, if we're looking at a monthly chart, let's say we just want to use this for investing. Nothing changes because we changed the market or the time frame. Here's a monthly chart of Apple, okay? Looking back to 2006, where was price in relation to the buy-sell line? It was above. So on a monthly time frame, we already knew that you shouldn't be thinking about selling if you were holding on to a position in Apple, or if you were thinking about it. This was a good time to do it because it was in the blue buy zone. Now you want to look for that nice steep upward slope, and it's had a nice upward slope since 2005, 2006. So you just simply add the signals and then take advantage of the ones that are either closest to or touching. And these are the filtered out ones. And you could have taken these ones here for potentially capturing 135 points, okay? Remember, you don't have to, if you don't want to, there's no reason to figure out even the inner workings of the company. All you have to do is just look at the chart if you want to keep it as simple as possible. Now that's a monthly chart. Let's look at a 1-hour chart of the Canadian dollar. This was just on the 9th, just going back last week, okay? Same principle applies, a steep downward sloping fluid buy-sell line. We apply strategy number 4. We want to weed out the setups that are far away or not touching the buy-sell line. So we weeded those out. Here's one here and another one here we could have taken that could have captured upwards of 60 That's not 60 points, that's 60 pips actually, in just about a day or so. That's roughly about $600. How about an intraday E-mini trade? This is the market I usually apply this with, okay? The same thing applies. There's nothing you have to change. You know, I hate it when I go to webinars and look at some other so-called educators' products and what they're teaching. And I'll look and see that a lot of their products work great, maybe on a chart 5 years ago or on cherry picking on a certain market. But you want to see that it works on every market, every time frame, and you also want to see that it happened, recently. And this was on the 12th, which was just last week. As you can see, we have a nice steep upward slope on a 10-minute chart of the E-mini futures. Here's a buy signal generated, but look how far away it is. So we would have bypassed that, and we could have taken our pick of any of these three. That potentially could have captured 24 points in the E-mini futures. And that's roughly $1,200 per contract. So the same process applies. Now remember, if we want to filter out these trades, we only want to take the ones that are closest to or touching. But sometimes that river is really moving with a lot of current. So what does that mean? Well, that means you're going to have a steep upward or downward slope. And because there's so much current, because there's so much going on, so much trend movement, it doesn't have enough selling pressure to come down to touch. Now, we saw that looking at crude oil, okay? As we see, crude oil, going back to 2020, has a really nice upward slope. And look at all the buy signals. So it never gave us a chance to buy closest to or touching. So oftentimes, if it's an extremely strong market, you won't get that chance. The same thing happened with Bitcoin, as you can see. Now, it came very close here. Look at these Bitcoin signals. This is a daily chart. I guess if you wanted to, you could have said this one was the one to take right here, which was at the end of January coming into the beginning of this month, of February. So just as a little caveat, it doesn't mean that price will always come down. If you're looking at a very, very strong market, oftentimes it won't have enough selling pressure to come down and touch the fluid buy-sell line. So just take that little bit of advice there. So look for these, experiment. But let's recap before we go into the question and answer portion. The first step is to choose your market. The reason why we say that is because, as you just saw, you can apply this process to any market, any time frame, Bitcoin, E-mini futures, currency pairs, and stocks, no matter what time frame or direction. Once you choose your market, then click on the buy-sell line because you want to know whether you should have a buyer's perspective or a seller's perspective. And the way it does that is that automatically the screen will turn blue if you should have a buyer's perspective, or red with a seller's perspective. That means that if price is in the red zone, you don't want to be a buyer. If price is in the blue zone, you don't want to be a seller. You want to do the opposite. So once you've found that out through step 2, then you go to step 3. You click on the fluid feature, okay? The fluid feature is going to actually show us that the buy-sell line fluid feature tells us the slope. So we can check out which, stock, future, currency pair has a really strong momentum behind it. And then we click on strategy 4. Strategy 4 is the basic structure that will enable us to trade whatever direction, whatever market we want to trade, okay? It's a pattern recognition strategy. It's extremely simple. We teach you all the rules. It's not black box. We teach you all the rules in the course and give you different ways to buy, sell, and place your stop. And if you want to kick your trading up a notch, only take those signals that are closest to or touching the fluid feature. Now, here's the best thing about this. This process is one click away on the PTS Primo charting platform. We made it simple. We made it so simple so that you can just click one thing at a time, and in less than 30 seconds, you'll know exactly if you want to be buying or selling, where you should be buying or selling, where your entries, where your stop placement is, because it's all right there on the platform. One click away. Think of it. You've got 44 years of experience, things that I've accumulated, one click away on our platform. So we have a great attendee discount today for all the people attending and listening to this 4-step process. We're actually going to offer you strategy number 4, okay? Really nice, deep discount. Remember, you're going to get instant course access, all the detailed instruction in our course lesson videos, okay? So you have all the entries, exits, and stops, and you're also going to get educational correspondence. That's my personal email. You'll be able to contact me whenever you'd like if you have a question concerning the trading and you're not sure about something, or if you just wanted some feedback back on something that you're looking at, okay? This applies to all markets and all time frames. This is our strategy number 4 special. But as you see at the very bottom of those bullet points, this also includes a special bonus. The special bonus is 6 months of the PTS Primo charting platform free. All right, this is a close to $900 value. You're getting this thrown in entirely free. This is yours. So you can apply this 4-step process with any trade, any market you're interested in looking at. But here's the best thing about this. There are also so many advantages to having the PTS Primo charts because you're also getting other studies, other edges that I have on the platform as well. They're free for you to use in that 6 months. For example, besides the strategy number 4, up and down arrows, you're going to get enhanced buy-sell line features, upwards of 4 different ways to view the buy-sell line. You also get a strength of trend tool that has a great ability to find out whether a stock is running out of steam or whether it still has a lot of momentum left in the trend, okay? Over 90 of the most prominent technical indicators, so you can experiment with this and tinker under the hood if you'd like. But here's what I think is worth its weight in gold. These 2 features, along with dozens more that we don't have time to post up here. That's when you combine the signal scanner along with auto-generated exit levels. Let me share with you how simple you could have done this in the past couple of weeks and how it could have really worked to your advantage. Now, on the platform, you would simply click on strategy number 4 in that upper green strategy tab, and instead of signal arrows, click on scanner. You'll see this page appear, okay? All you have to do is now click on load symbols. We provide you with symbol lists for markets like the Asian markets, Canadian markets, European markets, currency pairs, futures, commodities, Bitcoin. Choose whatever market and click load symbols. And in less than a second, you'll see the list of whatever data you're looking to scan. And then you just click on scan. That's it. There's nothing else to do after that. The feature will automatically scan for buy and sell signals. The green horizontal lines mean there's a buy signal in the corresponding stock. The red ones obviously mean there's a sell signal. Now this is an older display here from a chart example. Let me share with you what you could have scanned for a couple of weeks ago and taken advantage of if you were a member of this course. For example, you could have scanned and seen on the night of February 1st, all right, just a little over a couple of weeks ago, there was a buy signal generated in EH. You would have said to yourself, okay, well, that looks pretty good. I see I've applied the buy-sell line. I see that it has a strong slope. I think I want to take this, but I'm not sure about exiting. One of the best features we have on our platform that you'll be able to use in this 6 months are our auto-generated exit levels. On our new platform version, all you have to do is click on Strategy 4. In the drop-down menu, you see we've added an extra column for range extension exits. Click that on, and you'll automatically see 4 levels. Now, let me explain how this works. If you're the type of trader that likes to get in and out quickly, you don't want to have your money tied up, and you'd like to take maybe a 1-to-1 or a 2-to-1 risk-reward ratio, well then you'll be exiting at the first 2 levels. If you're the type of trader that likes to stay in a little bit longer to get more bang for your buck and want to have a nice 3-to-1 or 4-to-1 risk-reward ratio, you'll exit at level 3 or level 4. But that's it. Those are the 4 levels you should be trading at, and we feel you should be out of the trade entirely at this level. So let's say you've done your research, you really like this stock. Now, even though Strategy 4 has generated a buy signal, you've been watching it and you like it, you think it's got a big move in it. So you decide to exit, or you decide to enter first, and then you decide to exit at level number 4, okay? And look what happened here. In this last couple of weeks, just in 2 weeks actually, the stock potentially would have made you 35 points if you chose that level. Now here's another extra added advantage of these auto-generated exits. They have an uncanny ability to get you out many times just before the trend changes. Now this is happening, actually happened yesterday. So don't you think you would have liked to have these exit levels prior to taking this trade? This is the beauty of what's furnished. And once again, it's all one click away. These are things I've accumulated that you won't find anywhere else. I've accumulated from my experience on the floor, working with other traders, and you don't find these things anywhere else other than on the PTS Primo charting platform. This is all included. It'll be yours in addition to the strategy number 4 course, along with dozens more great educational techniques and methods included on the PTS Primo charts. You also get personalized tech support. So if there's any reason you can't load up a chart or you don't know how to view something or it doesn't make sense, you can contact tech support, and they will be there in a matter of moments to resolve the issue for you. Okay, so let's break this down. We're giving you a great deal on strategy number 4. Now, pay no attention to that graphic, because when we created that, we were mainly just educating stock traders. But remember, they've come back to us and said, listen, Steve, it works great on other markets and other time frames, so it can be applied to anything. And we're also going to be throwing in the PTS Primo charting platform. So the strategy itself usually costs $6.95. That includes the scanner. This comes with the video course and all the manuals and all the education. And the platform, once again, for 6 months, usually runs close to $900. What we're going to do is, normally we would offer this for $15.77. We're going to discount this down for a short limited time down to $6.95. You're going to save close to $900. That's nearly 60% savings on this. $6.95. I can almost guarantee you that most of you may have lost more than $6.95 in the last couple of months. Why not invest in yourself? For that small amount, $6.95, you can be up and running, become a student of mine, and you can learn how to trade strategy number 4 along with 6 months of the PTS Primo charting platform. I always tell our students, a year from today, you will have wished you took this course. I tell our potential students that, and many of our students come back to me and say, Steve, I'm so glad I took your courses because I've gained so much more insight and I'm now a consistent trader for the very first time. So here's how to take advantage of this. Contact Pro Trader Strategies. I developed the platform with them, and they are also in charge of all the discounts and all of the signing up process. If you'd like to take advantage of this great offer, I would suggest calling them up directly. They have trading consultants manning the phones right now. They can take your order of the phone if you'd like. You can contact them at area code 310-598-6677. Now, this link you see at the very bottom is a link that will take you up to the information and sign-up page. So if you'd like to sign up online, don't worry, you can do that as well. But that's not a live link, so all you have to do is go to the chat box on the GoToWebinar column on the far right and click on the chat box link there, and that'll take you right directly to the page. Remember, once again, I would strongly suggest calling up Pro Trader Strategies because they're there to help you and to serve you. There's no obligation. If you don't want to buy anything, you just want some more information about tech support or about pricing, they'll be more than happy to give you some quotes and some estimates. They're very flexible, and they're there to work with you. So there's absolutely no obligation at all. Okay, as we conclude, remember I said I would take questions at the very end. So if you do have a question, please feel free to ask it right now, and I will answer it to the best of my ability. First question, where do you place the stops? That's a good question. Probably I get that question more often than anything else in my webinars. The stops, we have a range of 6 to 7 different places for stops. That's all taught in the course. I just didn't want to give away all of the information because it wouldn't be fair to students that have taken our courses and have spent actually more than $6.95. Trust me, in the course, we teach you a different array of different stops. So in other words, if you're a type of trader who doesn't like to take risk and wants a minimal risk, we teach you what these stops are. If you're the type of trader that likes to stay in for as long as possible, we teach you different stop placement for that as well. So that's all included in the course. We wouldn't leave you hanging right there, okay? Let's see. Someone's saying, why don't you program the buy or sell signals closer to or touching the buy-sell line? Well, we could, but then once again, that would be going against, I don't know if you were here for the very beginning of the presentation. We want you to make the choice, okay? If we start going into that, we're only going to share with you signals that meet certain parameters according to our judgment or what some students have told us, you know, we're once again telling you how to trade. That goes against our philosophy. We want to provide you with everything and let you decide. Because, for example, we have students that say, listen, I've seen that, Steve, that it does work, but I don't care because I'll take each and every signal. I don't mind because, as we showed you in a couple of examples, many signals work out fine that are not close to, as you saw in the Bitcoin, and you also saw in crude oil. What if we had only programmed those signals in crude oil that were closest to or touching? Well, then you would have missed all those probabilities for going long crude oil. So we can't try to over control things. We're trying to give you everything so that you can really take advantage of that, okay? During times of a strong upward trend and then price goes below the 50-period simple moving average and the buy-sell line, and then price rises back up above, does price going below and then back above the buy-sell line into a strategy 4 signal increase the probability? That's a good question. Well, we don't know if it increases because what we'd have to do for that, we'd have to have some research and statistics, which we don't believe in. But I have seen personally, yes, many times that will generate a fine signal, because remember, this isn't like a magic number or a magic line. The buy-sell line, which we don't hide from anyone, is just simply the 50-period moving average, but it's a different way in which to apply it. And so just because you have a 50-period moving average line there, it's not like magical saying that, well, price crossed below it, that means all bets are off. No, many times it'll cross below a little bit and then go right back up the way the student says, and it's a great trade. But in terms of statistically saying it has higher probability, I just can't give you an answer for that. I just know that oftentimes I've seen that happen myself. But then oftentimes I'll see it, go below, come back up above, and then start to oscillate back and forth. So what we always tell our students is, listen, if you know what market you're interested in, study and research and look to see what best suits your needs. In other words, no two traders should ever trade alike. Someone could say, you know what, I don't want to take trades closest to the buy-sell line because it doesn't fit my nature. Then I have to wait, and I'm kind of sitting here doing nothing for days. Or someone else could say, no, I don't mind the waiting. I'm willing to wait as long as I get that high probability setup. So it's the same with seeing if price dips below or back. I would have to say, check the market or markets that you like to trade and see how it works for you. If it meets your needs, then by all means, go ahead. And we've even had students that have said, listen, Steve, since strategy number 4 is a pattern recognition strategy, a lot of times I'll see a great strategy number 4 signal generated just below the buy-sell line. Even though it won't generate an up or up arrow, I know what to look for, and I know that it's valid. So therefore, just because it's a little bit below, I'll take it. Now, that doesn't meet the standard benchmark, but if you've researched and if you feel comfortable, then that's fine. Remember, you are in charge of your own trading destiny, not us. That's why we said we will never just program only to see signals at a certain benchmark. We just don't believe in that. But good questions, very good questions. This is something that I've been using, this strategy, in some capacity now, going on 4 decades. So trust me, I mean, if you're worried about its consistency, it works very well. And I originally used this for stocks. Now, since I mainly trade E-mini futures, I just use it for E-mini futures. So it can be applied to anything. You saw the signals on Bitcoin. You saw the signals on intraday trading. You saw the signals on currency pairs. So pick the markets you like and then study this. But this is a great, great offer. Remember, it's close to, I believe, $1,600. We're discounting it down to $695. And I also believe that if you still have trouble coming up with $695, they will put together some type of payment plan for you if you'd like. So my suggestion, once again, is to contact Pro Trader Strategies. Give them a call. They're very flexible at 310-598-6677. They're willing to work with you. Absolutely no obligation to get a quote. And as we close here and take one last look at our disclaimer, thank you so much for taking time out of your Wednesday. This is a great, great course. I trade this myself. I can't think of a simpler way to get your feet wet with a method that I've been trading for years and that is really at the cornerstone of specialist trading. So thank you so much for attending. I wish you all the best of luck, and I look forward to all of you becoming students of mine in the strategy number 4 course. Have a great day. Bye-bye.